I'm joined by Cedric Masondo. He's the MD of SASRIA. We'll be exploring trends within the short-term industry as well as recent regulations that have come into place. Cedric, thanks so much for your time. Very much appreciated. Let's maybe start with the latter, and that is with regards to the regulations. So TCF, or Treating Customers Fairly, the POPI Act, and also the RDR. Maybe let's start with Treating Customers Fairly. Where are we in terms of that rollout and maybe the impact that we have seen this have on industry?
Thank you very much. I think TCF were in the full steam of implementing TCF, and TCF is not just creating policies, but it's to make sure that we embed the culture. I think most companies are in that process of embedding the culture from the top to the bottom. So, and the impact, hopefully the impact will be positive to the clients.
And obviously, from a customer standpoint, this is an enhanced, more client-centric focused for the consumer. But looking at the insurance industry as a whole, the implementation of TCF, it's been said that it would cost insurers a lot more. Can you bear testament to that?
Yes, there's no doubt. I mean, it cost us money, but I think it's the right thing to do, and all these regulations are designed to protect the client. But I think the main thing is just to make sure that TCF is understood, and it's not just a policy, but it's understood at all levels, and that's going to take time. It's not something that you can just implement in 1 year. So it's going to take time, and also every year you need to reinforce TCF to your staff.
Cedric, what would you say has been the main hurdle with implementation of this TCF regulation?
I think from our side, the main hurdle is just the culture. It's just changing the culture of employees and to understand that client is more important. It's also the main hurdle that you're not just looking at the profit. You also need to look at the interest of the clients, and from designing the product, and you need to take the client's interest into account.
Moving a little bit from TCF now to another regulation, RDR, or the Retail Distribution Review. That is still under review, if I'm not mistaken. Where are we with that process, and what exactly does it mean?
I mean, we're still in consultation phase. I mean, there's been a discussion between the industry players from the SASRIA, insurance companies, and the intermediaries. So at this stage, I mean, it's just discussion stage, but it will change the way the product is distributed and how the players in that channel are compensated.
So the key thing would not be the intermediaries. What are the concerns that we're hearing from maybe the smaller brokers in terms of what would happen to their fees, or maybe they may need to give up their books, the ones they currently have? Is this a fair concern that they've been raising?
It depends on, I mean, the end results, how much fee can be reduced. But currently, the intermediary fee or the commission, it's capped at 20% for non-motor and 12.5% for motor. So if you have to cut that, of course, there will be a concern from the smaller brokers. But brokers also do more than just selling product. They also do administration. So there's still a question on how are they going to be compensated on other administration duties that they perform, either on behalf of the insurance companies or on behalf of their clients.
This is a huge balancing act. In your view, how is the FSB doing in terms of putting these regulations in place and making sure that it's obviously for the benefits of the industry as a whole, as they may say, and also looking at the intermediaries that are in this boat? Are they getting the balance right?
I think from the FSB point of view, I mean, I think I want to congratulate them. The process has been very consultative. There's a lot of forums where the brokers through FIA or also insurance company through SASRIA can engage the FSB. So it's not been just FSB coming in and saying this is, you must implement like this. I mean, RDR will take a couple of years before it becomes a final regulation. So they've been very consultative to the industry.
And this has been in line with best practice. I mean, where else have we seen it being implemented in the world that we can say, you know, this has been done, this is what we're working towards, and it's, you know, in the end has resulted in a better insurance sector or financial sector?
I mean, FSB's main, focus is just to make sure is to protect the clients. I mean, I think it's clear that the chain has become longer, and there've been so many mouths to feed in this process. I think that's what they are trying to do, is just to make sure that they protect the clients. And we've seen in a number of cases where additional fees are just added in, and the clients end up paying those things. So I think it's a right thing, and also to streamline this whole process and make sure that the right premium is paid and the right fees are paid by the client.
Poppy. That's another one that's come in that I'm particularly happy about, because I'm hoping it means that I won't be getting any SMSs from unsolicited numbers. Is that what it means? Is it essentially the protection of client information?
Yes, yes. Of course, it's a good thing for the client, but it also poses a lot of risk for the insurance companies, because insurance companies, intermediaries, they sit with clients' information, and Poppy is trying to make sure that that information is protected. So we've looked in our organization, for example, we sit with clients' information, whether during the claims process, and we need to make sure that that information is protected. It doesn't end up in wrong hands. So it's going to be expensive, because it's not just developing policies and practices, but it's also making sure that the systems are developed to make sure that no one, get that information.
Talking about concerns there, though, is the appointment of a information regulator. The progress on that, has one been appointed yet? And we talk about expenses. Is it discarding the information that is going to be expensive here?
Yeah. So of course, all regulations you need to beef up with the appointment of personnel. But in Poppy's case, in our case, we've realized that the more cost will come from making sure that the system is fireproof, that no one can't just get into the system, and also to making sure that in the office environment, we don't have papers lying around with clients' information. I think we take it for granted, especially when you deal with claims, and we take it for granted that this is just a paper, but it contains clients' ID, clients' banking details, and their addresses. So I think it's a good act. Of course, the first three years, it will cost us money, but eventually it will be part of business for us. In
the long term, we definitely will see the benefits, as you're saying. So treating customers fairly, RDR and Poppy, all there in order to make sure that we have a better, more solid footing in terms of the insurance sector or financial industry as a whole. Thank you so much. That was Cedric Masondo. He's the MD of SASRIA.